Good morning, good morning. Audio check. If I can get some feedback that the audio is good. Good morning, HRC. Good morning, JD. Sounds good. Okay. Loud and clear. So I did change a little bit of I guess you could say the picture. Hopefully this comes up a little bit more clear. I want you guys to read over the risk disclaimer first, and then I'll show the picture and we'll make sure that that's good and you guys can see that clearly, and then we'll go into the charts. So just give it a few moments. I want to make sure everybody's in here and everything's good. Good morning, good morning. Please make sure to read over the risk disclaimer. There is risk involved in trading. Yeah, if you guys don't mind to give it a like, the live stream. That way it can get out to more people. I'd appreciate it. Good morning, Danny. Man, there's some of you guys that support me too much, man. I really do appreciate it. Oh, Brian, you're funny, man. Good morning, good morning. So just give me like one more minute here. Make sure everything's good, and then we'll get into it. Don't be too eager this morning. I'll talk about it. Real, recognize real, Danny. Of course, of course. All right, I'm gonna take away this risk disclaimer. Let me know, guys, if the picture is better than it was yesterday. I should be, hypothetically, I believe. Yes, I just started looking at bonds. As you know, Danny ICT put in the Telegram about bonds. I honestly have never really looked at them until he mentioned it, and it seems pretty interesting. Hopefully, ES just clears up here. I prefer just to stay on futures. I don't want to jump around way too much, you know. Less distorted. Okay, that's what I believe is it's less distorted, and it's not vertically stretched like it was yesterday. The reason why I'm having such difficulties, or was, is because I have a widescreen that I'm live streaming on, and OBS is very strange. This is like my first time ever really live streaming, so it's going to take me a little bit to get adjusted. So let me detach the chat here. That way I can look at my actual chart. So let me know in the chat if anything ever goes wrong or out. Please make sure to put in the comments because I may not be looking at it or something like that. So we're going to have a look at ES, and we're going to have a look at the dollar index. We're going to start on the daily time frame. So first off, economic calendar. We have news 30 minutes after the open. It's JOLTS, jobs reportings or openings, something like that. I don't really care, to be honest. That's, to me, is where we're going to have to wait for that to play out personally. We have FOMC tomorrow. We have NFP on Friday. This week is you got to be very nimble or just simply sit out of it. And I know that sucks to say because we've all been super eager to trade since we've been inside of this range, and it's been really tough conditions. And this is where it'll make or break you as a trader. And you really just have to be very, very careful. And You have to submit to the market, unfortunately. It's what we signed up as a trader. We have to submit to the market, submit to what it's giving us. We can't really just force our hand in here. So what I'm looking at on the dollar index is, I'm actually going to pull it up on this screen here. This is where all my markups are. We climbed above the buy side liquidity. Yesterday I mentioned how the dollar was extremely bullish, but ES, NQ, and Dow weren't really in sync with it, which was concerning for me to want to go long yesterday. And you saw after the live stream ended, I ended up going short on ES because dollar was in sync, meaning it was moving opposite to ES. And there's a few other things that were in confluence for me. So now that I'm looking at dollar, I'm trying to see where it's going to head next. I think today and tomorrow are going to be huge tells as to where price wants to go. Looking at it, this bearish order block to me is really no longer significance, unless for some reason we respect the mean threshold here and we see a cascade lower. Looking at lower time frames, it doesn't really make much sense to me. If you go into a 4-hour time frame here, I'm just going to actually full screen this here. We dug down into a bullish order block here, expanded above the buy side liquidity. We have a fair value gap in here, and most importantly that I'm paying attention to is the volume imbalance. I think that's a stronger draw on liquidity. In here, it's a balanced price range as well. We have a singular pass up, singular pass down. I'm curious to see, like I said, are we just going to simply turtle soup this buy side liquidity? And with this news event driver today, do we see a down close candle on the daily chart? We're going to know that pretty soon here. Honestly, I would prefer that because it would be in alignment with everything else that I see on ES, because I see higher prices on ES, NQ, and Dow. I'd prefer dollar stays heavy to the downside. That's just personally what I would like to see. I'm not saying we're going to get that. If we do expand to the upside, like I said, we have this remaining portion of this fair value gap in here, the volume imbalance. It would really need to show willingness to go lower very quickly from here. Otherwise, we're going to keep expanding into buy side. 1 hour time frame. Last night we dropped down into our fair value gap in here, bullish order block. So all these last down close candles are your bullish order block. On lower time frames, we took out sell side liquidity. We displaced higher. If you go down to like a 15-minute chart, we took out sell side here, displaced higher. We actually have like a new day opening gap in here. So just pierced the buy side a little bit, came back down, used the new day opening gap to get above the buy side liquidity again. Displaced lower, and since then we've been displacing higher. So there's nothing in here that suggests to me, at least on lower time frames, that we're going to go lower right now. It doesn't mean that we can't. It's just right now I don't see anything that would suggest that. I would only possibly look for the volume imbalance to be targeted. And that's why I'm going to let time do the work for me. And I say this repeatedly, basically every single day, is I let time do the work for me, especially in these conditions, especially with the economic calendar. Just let time do the work for you. Try to put yourself in the best position, and don't be FOMOing into positions right off the open. I know a lot of people do that. It's like people are looking at the clock right now, and we got 5 minutes or 6 minutes. It's like, I'm in no rush. I'm in no hurry to do anything. And you guys shouldn't either. If you're that type of person who's very, very eager to jump into things, you need to really figure out why that is. And it probably doesn't have to do anything to do with the charts. So let's dig into ES here. All of these are new week opening gaps. I have 4 of them on. You can use 4 of them as your look back. If we climb underneath this new week opening gap, I'm not going to get too complicated here because I know there's probably some newer people, but If you split these new week opening gaps, you're going to get your event horizon, which is basically equilibrium of these new week opening gaps. So I'd be curious to see if we dig into that. There's nothing in here when I look at a 1 hour time frame, and I'll dig out to the 4 hour. There's a 4 hour fair value gap in here. But there's nothing really inside of this region that as far as like imbalances or a PD array that I would like for price to retrace into. So only thing I'm really looking at is potential event horizon, which is resting basically right in the middle here at 41.62. So it's not something I have in the charts right now because I don't like it to have too cluttered. It's just something I'm keeping in the back of my mind because there's nothing else that I particularly like. We do have sell side liquidity resting at 41.71.50. So that's what I'm going to be looking at for price to target, at least for the first opening 30 minutes. And we'll see after with the news event driver what happens. Last night we retraced into a premium, rejected off the actual new week opening gap from this week, saw displacement lower from there. What I'm most importantly paying attention to for this morning is this 4 hour fair value gap. So I want to see once we get into here what price does. That's going to be very important to me. See if this holds. And I think a little, I guess, gem or tip. When I used to trade ICT, I was very much like a swing trader when I traded Forex. I've been doing this a very long time. And I'm only saying that because when I was trading Forex, I was very much like an intraday, like one shot, one kill. And I would be entering off of like a 1 hour, 4 hour PD array. And I'd get stopped out plenty of times where price would just slice right through it. And now with the way I trade is I'll look at a higher time frame PD array and I'll wait for price to dig into that. And if on lower time frames it shows me my model, to me it's like an extra confirmation and it protects me rather than me looking at this and saying, okay, I'm just going to enter long at equilibrium of this. I can go down into a 1 minute time frame and wait for price to print something to confirm to me to go long rather than me kind of just blindly going long in there, if that makes sense. To make note, we have a daily fair value gap in here. So if we're going to continue bullish, in my opinion, this needs to hold, meaning that this needs to show support and needs to show willingness for price to go higher. We'd be looking at 42.06 as a draw on liquidity. There's a lot of things that are not in our favor this week, guys. We really, really have to be careful, really have to be precise, and pick our shots carefully, especially with timing. That's the reason why I'm just going to wait and watch the first 30 minutes. So that's our kind of objective for this morning, at least for the first opening 30 minutes, is I want to see if we can dig into that. 1 hour time frame, sell side liquidity here, that's what I'm going to be looking at. 30-minute time frame, we have a fair value gap that's still remaining portion that's kind of open. So I'd like to see if we dig into that. If you look at your 15-minute time frame, we have a bearish breaker in here. High, lower, low. So that's an actual breaker pattern, not mitigation. Dug up into that this morning, pre-market, and we've been displacing away from it. This is where I'm paying attention to for right now, 41.71. And then on the 15-minute time frame, we have the remaining portion of this fair value gap that's open. So I want to see if price wants to draw into that during the first 30 minutes. And then we'll kind of just take it step by step after that and see what price does. Remember, the 4 hour fair value gap is kind of like the main focus of today, and see how price reacts to that. If it's showing willingness to go higher after it digs into that, then we'll see if we can get some higher prices today. Okay, does it make sense, everybody? That's what we're looking for. And that didn't mean to go short or long. I'm going to go ahead and set this up the way I like it. So I'll probably have a 1 minute time frame on the left here and a 5 minute on the right. So I'm going to go ahead and put the new week opening gap as well. So this is a previous new week opening gap. It's down here. We're going to see if that shows willingness to either show support or do we just trade right through it. And if I'm quiet, it means I'm watching price. So it looks like we tagged 41.71. We're digging into that 15-minute time frame for bad gap. I'm actually going to change this real quick. This is the one that I will be trading if we do trade today. You can see here on this right-hand chart, I don't have any annotations. All my markups are on the left. The reason your trading view doesn't transfer it over, but I do like to have a clean chart because sometimes you can have too much annotations. Make note, Dow is dropping lower, NQ is stagnant, ES is dropping lower. So we have a decoupled market right now. Dollar, not much movement. These are conditions that you need to make note of. When things are decoupled, it's not in your favor. So decoupled means that one market is doing different than the rest. So look at NQ right now. It's going higher while ES is dropping and Dow is dropping. You want them to be in sync with each other. You want them to be in tandem with each other. Even the dollar. I talk about this over and over again because that's how you find your high probability setups. It's not just an entry pattern. So if you look at the 4-hour time frame, thank you, Brian. You're a blessing. I forgot about the RTH gap. Something I was like, I know I'm forgetting something. So yeah, it looks like on the RTH gap, so if you toggle over, we have regular trading hours and on electronic trading hours. We gap down. So in a bullish climate, if we gap down and we have a gap like this, we can see if price wants to go ahead and fill that in later today. So we can use that as a draw on liquidity or even a bias. Yeah, Danny, I don't think anybody else has said that phrase, but I think I'm going to coin it. So I'm just looking at the RTH gap. So we took out that low there. So this gap in here, that's what I'm going to be looking at to see if we can fill that in. So let me mark that out, just so I have it. Make note that we're completely decoupled right now. Dow is moving a lot lower, NQ is moving higher, and ES is somewhat moving lower, but not as aggressively as YM. This is usually what I do with my RTH gap, is I kind of just make a box and remind myself of where it's at. So if we do climb higher, I'd like to see it fill that in completely. And you can use that as kind of like a new week opening gap or new day opening gap just for that current day. That's funny, Zach. Yeah, sometimes it's a little much looking at streams and charts and discords, telegrams. It's a lot. So this black line here, that was 41.71. We took out the sell side there. So there's nothing in here that's intriguing to me. It's just simply reading price. And if you've been doing this long enough, you will have an intuitional feeling around price. At least for me personally, like I know when days are very clear because I just have a feeling, like it just makes sense. I can look at a chart and go, okay, we're going here and we're doing this. And it feels right, even before entries. And you'll notice on days where it doesn't sit right with you and things aren't, as easy to tell, you just have a feeling that it doesn't feel right. Intuition is very big. Jared Tindler talks about that as well. I mentioned in his book. He has a section on his website about it. I think it's very real. I think if you spend enough time subconsciously, your mind knows certain things, whether you're in a good condition, bad, etc. So we're digging into that 4-hour fair value gap here. Dollar still printing higher. Dow's moved significantly lower. I want to see if NQ wants to get into sync with it, or does it just simply stay stagnant. I would mark out on NQ the sell side resting at 13,258. We have relative equal lows in there on NQ. So Dow is really showing a lot of weakness here. We do have a bullish order block in here, but I'd prefer it not to come down in there because it's already reclaimed, or would be reclaimed. We've already used it once, and I'd prefer it not to reach down into there. Reason being is if you're looking at least structure-wise, from this dealing range low to high there, that's a pretty deep discount. I'd rather price just respect this fair value gap in here and then see higher prices. That's what I would prefer. If you look at your 15-minute time frame, I can do it for you. If you're new to this, or at least new to me in my stream, if you don't see me moving my charts around, it's because I'm probably looking at a different monitor and marking something up on that one. But on the 15-minute time frame, I'm interested in this wick in here. So I'd mark out this in here and then maybe the CE of that wick. If we do come down into that region, that would be of interest to me. Remember our new week opening gaps. We climbed underneath this one. This was an old new week opening gap. So I'm interested to see if we dig down into there, what price does. Just looking at price, basically through all the time frames, nothing really looks bullish to me right now. It looks pretty heavily bearish, but it could change with the news event driver. Remember, we're waiting for that That's the reason why I'm not touching anything. I'm not doing anything until that plays out. NQ looks like we're moving towards that sell side, which is good. It's wanting to get into sync with Dow and ES. Looks like Dow has moved into its 4-hour fair value gap in there. Let me have a look at the 5-minute time frame in here. And it's funny with that wick on the 50-minute time frame. I didn't know this was a bull shorter block, but through time and experience, that wick just stuck out to me. So this last down close candle is of interest to me as far as just a draw on liquidity for right now. I want to see if we can draw into that. Make note of the buy side at 41.83. Cody, man, I swear you are always killing it. Good to see though, brother. I suspect that this is going to be very nasty PA today. It sucks to say that, I know, but typically, just even on a good week and even in good conditions, as far as like a macro scale, even without NFP, the day before FOMC, I'm typically not even trading, or I'm very aware that price is very, very fickle. So I'm very, very cautious this week. You can make note on your 5-minute time frame, the Sibian here. I wouldn't do anything with it. It's just something I'm going to watch. Why would I not consider this as a potential shorting opportunity? Let's say, we don't have a news event driver, or we don't have FOMC, or we don't have NFP. We're overall bullish, right? On a macro scale, daily time frame, we're overall bullish. That's our narrative. We're coming into a parent 4-hour BISI. So even though you don't see it right here, if you went out to a 4-hour, right, we're inside of that 4-hour fair value gap. So to me, to take shorts inside of here, especially on a macro scale, if we're bullish, it is lower probability. So you have to weed these things out, and that just comes through time and experience, or just simply understanding, where you're at in the market. I'm going to mark up the buy side liquidity, the relative equal highs up here. So do make note that let me see with RTH gap. So the RTH gap, to fully close that in, is basically right above that relative equal highs in there. So if we do start expanding higher and we do start to see bullish price action, I would look for that buy side. But there's needs to be a lot of things in order for me to confirm that we are bullish. If you're just simply reading, I'll take this away. If you're simply reading a 1-minute time frame, basically right from the open, we displaced lower, came into this fair value gap in here, and seen a small displacement lower. Nothing in here, okay? In order for me to really be bullish on this, we would need to climb above this SIBI here. And I'd be looking at that buy side as I draw. And the only thing we'd be going for is 5 handles. That's what these conditions are right now, at least for me, is 5 handles. You can find a lot of consistency. You can make a lot of money with 5 handles. If you're precise, you don't do a lot, you pick the right shots at the right time, you can let 5 handles stack up over time. Don't let anybody else tell you differently. Even coming from me, I kind of snickered at 5 handles, but then I saw the power in it, and it truly is very powerful, especially when higher time frames are difficult to navigate and the ranges are small. 5 handles can serve you a lot, even if you go for 3 handles. Believe it or not, that's you can find consistency of that as well. Mental Game of Trading by Jared Tindler. Yep, I'm just reading through the chat. So we're about 13 minutes until at least my 9 o'clock hour. It'll be if you're using New York local central time, your 10 o'clock hour. So, A, we're waiting for the news event driver, and B, I'm pretty focused in these conditions on the silver bullet, if you're familiar with that. I think it's kind of the best thing you could do for yourself right now is waiting for that. Let me look at the dollar index. I haven't really looked at it. Still stagnant. Hasn't moved. What I would annotate is there's a 1 hour bullish order block. So do we reject off of that and see higher prices into that volume imbalance that I was mentioning earlier? Or right from the news event driver, do we just see a turtle soup and a displacement lower on dollar? That to me it's the best opportunity for us. If you're looking at the daily chart right now on dollar, I could pan over to it. I just want to change it. We're right inside of that mean threshold of that bearish order block. So do we simply turtle soup that buy side, use the mean threshold of the bearish order block, and then see a displacement lower? And that would help us with our bullish bias in ES and NQ and Dow. That would be the best thing for us right now, as far as what I'm looking for. Because if we continue to see higher prices in dollar, we're going to see lower prices in ES, or it may just be stagnant, and I'm not interested. In order for me to like a trade, I need dollar to be in confluence. Or if it's just consolidating and not doing much, I can take a trade in those conditions as well, but I would prefer it to be moving in correlation, meaning oppositely to ES. Yeah, silver bullet has a lot of different meanings depending on who you ask. As far as what ICT has stated, it is between New York local central time, the 10 o'clock window and the 11 o'clock window, where you're looking, you turn on the charts right at that time. So basically right about now, you turn on the charts, you see what side of liquidity has been taken, and there will be a fair value gap that forms during that time window, and you look to target the other side of liquidity. Now, you can make it your own. He was trying to make it as simple as possible for newer students where you don't need a narrative or a bias, or you don't really need other things. But if you put in the work and you understand what all of those things are, you can combine it and make it your own silver bullet. Some people name the second stage of market maker sell models or buy models as your silver bullet. ICT calls it the unicorn trade. So that's what I refer to. DXY is not too slow for TS. TS, I'm trying to think of the abbreviation. It's slipping my mind. I'm not sure what you mean by that. If you have a look at our 30-minute time frame, if we close underneath this, so we have about 9 minutes. If we close underneath this, the fair value gap in here, that's going to be concerning for me if we're going to look for higher prices in ES. It would suggest to me that we'd possibly continue to see lower prices. And if we are in that instance, I would be looking at this new week opening gap down here. So to me, when you're looking at new week opening gaps, I use them very much like a ladder system. And I use 4 as your look back. It's very much, if you went through the core content, very much like 20, 40, 60-day IPDA look back. Algorithm is going to refer back to these levels. So I would look at this new week opening gap. If we do close underneath this fair value gap in here, there's nothing in here, right? So if you're ever trying to read price, you're reading order flow, is there anything after we close underneath this 15-minute? Let's say we do, right? We close underneath this 15-minute fair value gap in here, that 30-minute fair value gap. Is there anything else in here as far as a bullish PD array that would send price higher? Well, I marked out that wick in here, which we went out to the 5-minute, is a bullish order block over here. But we've already used that. So there's really nothing in here that would suggest to me that we're going to send price higher. We do have the 4-hour, which is the parent, which I do have in the back of my mind. So I'm going to wait and see, do we see rejection off of that? But for me to really like something like a parent fair value gap, so like the daily and the 4-hour, if I went into a 1-hour, a 30-minute, a 15-minute, a 5-minute, they would all be nested inside of each other. When you have a nested fair value gap or a nested order block, breaker, etc., it creates higher probability environments, at least for me personally. But if I'm only see a fair value gap on one time frame and I go down on the other time frames and nothing else is suggesting me that there's anything in there, I'm pretty cautious. So just looking at higher time frames again, we took out sell side liquidity in here. We still have about 7 minutes until the news event driver. I think the 30-minute will be a huge sign. I'm not saying that the 30 minutes is a huge time frame for me, but just in this particular unique moment, this fair value gap sticks out the most to me. And if we were bullish, the fact that this is nested inside of that 4-hour, to me, it should have respected it. So and the fact that the dollar is not showing willingness to go lower, that's also a sign that we could see lower prices. Oh, turtle suit. Thank you. Is DXY not too slow? I mean, anything can happen with this news event driver. I mean, you could see just a rapid displacement lower out of nowhere, and we could see a rapid displacement higher out of ES. And that's why I love the phrase that I keep saying is let time do the work for you. Because sometimes I don't know, and then you let time provide to you information, and it lets you gain a better clarity over the market. As of right now, I don't see higher prices in ES, but who knows? In an hour, things could change. Blindly following the silver bullet without narrative is suicidal. I agree, but if you're very new, it takes a lot of time to understand narrative, because to understand fractal time frames and to understand from a macro level down to a micro level, especially into a 1-minute time frame, it takes a lot of time and experience, and that's what I try to harp on the most with people is you need to understand narrative and bias. Most importantly, in my opinion, it's not needed necessarily, but it really, really helps. So I'm just paying attention to kind of these levels. Remember, this is the order block down here on the 5-minute time frame. So see if we can draw into that. Looking at the 30-minute, there is another fair value gap down here. But if we reach way down into that discount, like I said, that's going to provide problematic conditions for me if we're looking at a bullish bias. I don't care. I'll go short. I don't really care what this thing does. I just need to kind of confirm with everything else what it wants to do. You could even see in here we're wicking back and forth, overlaying. So even on like a sub 5-minute, 1 minute, it's very choppy in here. So I'm actually going to mark this out. And if I believe that new week opening gap, the old new week opening gap, is right in that region as well. So to me, if we close underneath this about 3 minutes, this may be our draw. And if we see high prices in dollar, this would be our draw. I said I have everything visible to its own time frame because I'm super OCD about my charts, and just like that irritated me. I send everything to the back, that way it's not sticking out, if you wonder why I do that. So NQ, those relative equal lows are, to me, my interest. Unless we see immediate higher prices from the news event driver, then we'll leave those and it would be a bullish SMT. But as of now, that may be the draw for NQ. It's kind of just a mess. So mark out the low at 41.52. That's your sell side liquidity. On a 15-minute chart, there's a fair value gap resting right underneath it. So if we continue to expand lower, that would be my draw. So here. And then I'm going to mark out, as far as the 15-minute time frame, I'm going to mark out the CE of this wick here. So we got about 1 minute until we see a release. So these are the levels that I'm looking at. I'm not going to really look at a 1 minute right now. I don't have it pulled up on the chart you're looking at, but I'm looking at dollar. It looks like we're just continuously pushing higher. So that volume imbalance at 102.515 and 102.514. We'll mark that out. You got about 10 seconds here. So it looks like dollar's dropping in here. If you look at your 1 hour time frame, that last down close candle, your bullish order block at 102.267. If we traded through that and we closed beneath it, to me that would be a change in state of delivery, meaning that we're changing from a bullish or at least a buy program into a sell program, which would be on a higher time frame us turtle souping that buy side and us changing. So we came up, if you look at our 15-minute time frame, we came up, used that old fair value gap as resistance, and we're seeing lower prices in here. Dollar's dropping alongside it. So 15-minute time frame, that wick here. Let's see if we can draw into that. And the new week opening gap down here in the sell side. We're still resting inside of that 4-hour BISI. Just at basically the CE of it, climbed a little bit underneath it. Daily, we've gotten underneath the discount low of that fair value gap in there. Yeah, if you look at our 30-minute time frame, we closed underneath that fair value gap, and then we came up and used that as resistance. Dollar's dropping alongside it, per usual, not wanting to get into sync with everything. So even after like a news event driver drops like this, we're still within the first, not even 5 minutes. So again, I'm letting time do the work for me. I'm not very eager to just jump into things, because you'll see that once it wants to move in the intended direction, you're going to see that it proves itself to you, which we may very well be bearish. So we have to see, does it really want to continue to seek lower prices? And the confirmation to that for me would be dollar seeking higher prices. If you look at your 1 minute time frame, we do have a fair value gap in here. So I'm going to make sure this is visible. So we have our old new week opening gap down here, sell side liquidity, and then we have the CE of that 15-minute time frame wick. Was there anything in here that signaled us to go short? In my opinion, no. So is this missing a move? No. Do I feel any type of emotion towards this? No. It's not part of my rule set. You can't miss anything that wasn't a part of your rules. Right? That doesn't make any sense. And to be completely honest with you, I have like a conflicting bias right now, because on a macro scale, I see higher prices, but we're seeing lower prices, and I'm waiting to see is it wanting to prove itself that it's truly bearish. The confirmation to that would be, to me, it looks like we're already moving past that 4-hour fair value gap, which is exactly why I stated earlier, with higher time frame PD arrays, I've changed the way I use them. Is I wait for the lower time frames to confirm to me. Was there anything in here that confirmed to us that we were bullish? No. So there was no reason to buy it. 1 hour time frame, we have a fair value gap. We also have a breaker. Yes, Justin, that is a breaker, but that is a reclaim breaker. We used that on last Friday. So do we come into that as a draw on liquidity? I don't see us using that to be bullish. So, like I said, these are my draws on liquidity for right now. CE, so 4157.50. Sell side resting at 4152.75, and then the new week opening gap in here. If you look at your 1 hour time frame as well, I think that 1 hour fair value gap resting at 4153 to 4146 would be the draw for right now. So again, don't feel like you're missing something or you have to jump into this because it's moving a lot. There's nothing in here that's signaling us to go short. I was going to look at this fair value gap when we close down here. If we punched up into that, I would have considered going short, to be honest. So we just tagged the CE of that wick in there on the 15-minute time frame. If you're looking at the 5-minute time frame, this was our bullish order block. So we're basically trading right through that mean threshold. I'm not really going to put much importance on that. I'm going to put more importance on the low at 4152. If dollar can pick up some speed to the upside, that would be fantastic. Dow's really, really weak. NQ, if you wanted to play the Six Sister approach, to me that would probably be the better shorting opportunity. I'm not saying to go short on it, but it's still, I'm looking at it right now, it's a mess. But it's lagging behind ES and Dow, and I think those are the leaders, and I think NQ's relative equal lows that I mentioned, that 13.258 are the that's a draw on liquidity for NQ. So there's just even nothing. I'm looking at NQ on the 1 minute, and there's nothing at it. Khalif, I mean, maybe, but like I said, the way I trade now is like you can watch that region of price on a 4-hour, and on lower time frames, does it show you willingness to go higher? But it's not something I would enter off of solely. So right now we're looking at 4153. There's nothing in here. Is there anything in here signaling us to go short? No. I'm not just going to chase price. There's nothing in here. So we're digging into the 1 hour fair value gap, or almost. So we just dug into that. We're inside of the new week opening gap. I mentioned the old new week opening gap. Dollar looks like it's picking up a little bit in here, but we do have, if you look at your dollar 5-minute time frame, we do have a bearish order block. But I would like to see that get disrespected if this thing's truly bullish. NQ went right through the relative equal lows in there. So a lot of movement today, a lot of movement. Okay, so whenever this happens, you want to bring yourself out to a higher time frame again when there's a lot of movement. And kind of regain clarity as far as what price wants to do. This is your bullish order block, but I just don't see that as a region to go long. If anything, it was just a draw on liquidity for price to draw into. The fact that we've bled all the way through this 4-hour fair value gap, I think we're changing our state and delivery, and I'd be looking at this low here at 41.32 as the draw. Looking at NQ, look at the low at 13.169. Dow, the low at 33.750. So they're all moving in tangent with each other, which is a good sign. If the dollar can pick up speed to the upside, to me it's pretty confirmed right now that we're going to see lower prices. We could have just simply on a daily time frame swept the high here, and then we're going to see lower prices, which I'm not particularly happy about because I don't want to really see us fall back into our range. But if you look at seasonal tendencies, typically I believe the dollar is bullish and ES or futures see lower prices. So we could see coming into May, right? We just moved in a new month. Could see that start to kick in here. So looking at our daily time frame, remember we're moving out to a higher time frame to regain clarity because we've moved a lot already. I'd be looking at this area on a daily time frame probably as our draw on liquidity for now. And what that means is you start refining it on lower time frames. Is that low in here, and then we have the remaining portion of this BISI in here. So what we're going to want to see is there something in here today that would present itself to go short into that low that would provide 5 handles. But as of now, we're just simply melting off. And I don't feel any type of emotion. You didn't miss anything. If there was some type of rule model set in here that was extremely clean to me, that followed my rules, and I didn't press the sell button and then price fell off like this, then yes, that would be me missing my model and my move. But simply, there's nothing in here. It's just having discipline, following your rule set. This is going to happen plenty of times throughout your entire career. So if you look at the right chart here, we're inside of that 1-hour fair value gap. So completely disrespecting it. That's my focal point, or at least draw on liquidity is 41.31. I think we'll start to see price to slow down here a bit. We're still within the first 15 minutes of the 9 o'clock hour for me. So 30-minute, we're moving inside of that fair value gap in here. 15-minute. And now if I dig into a 5-minute, We have a few fair value gaps. So now that I know my draw, at least I'm looking at it a little bit with more clarity and certainty that this would be my draw, 41.32. We would have to find something that would set up price to go into there, at least that follows my rules, which for me, this would be kind of a continuation pattern. I posted this on Twitter yesterday. This would just be a continuation pattern with a higher time frame buy side liquidity purge. So you don't always need on lower time frames buy side to be taken. If you have a higher time frame context where buy side's already been taken, so on the daily time frame we just went over how it took out buy side. To me, it's just a continuation pattern. So what I'm looking for is, can we find a fair value gap that's inside of a premium that would take us into lower prices? So for me, I love the 5-minute time frame. It provides the most clarity for me. And when you have a fair value gap that's on a 5-minute and it's nested, meaning that the 4, 3, 2, 1 all exist within the 5, that's all inside of a premium, it's a really good sign. So if I'm looking at a 5-minute time frame, I'm looking at our dealing range and I'm looking at that high there and wherever the low forms. So we're going to need a low to form in here. We have a fair value gap here and one up here. So those are of interest to me. I'm going to have to see in lower time frames what it looks like, but I'd probably only suspect this one to be traded to. I'd rather this one be left open as a breakaway gap if we are really going to see lower prices. So mark out this one on your 5-minute time frame. And then this one above it as well. So per the 2022 model, if you have two fair value gaps, you can enter in on the first one, but you can suspect or expect price to dig into the second one, which means your stop loss needs to go above the second one to protect yourself. And to me, this is kind of like a market maker sell model. So you can bring out anything from the left side. If there's something in here as far as like a fair value gap and it supports the same area as these two, you can bring that out. You can draw it out in time as more confluence. One-minute time frame, it may just use this new week opening gap, the old new week opening gap, to send price lower into the sell side at 41.32, and that's completely fine. If it does that, sure. Some of you may be asking yourselves, or asking me. I haven't looked at the chat, but there's a few fair value gaps in the 1 minute. But since price has displaced so heavily, we're inside of a deep discount, and if you're trying to go short, you do not sell in a deep discount. You need to be selling inside of a premium. So for me, that would be chasing price. Since we've displaced so heavily lower, and on a macro scale, we're digging into a deeper discount. I need price to retrace into a premium in order for me to like shorts. Otherwise, I sit on the sidelines, and it's just me following my rules. Let me look at the chat here. How can we enter into such moves when there's no pullbacks? Well, that's just called simply following your rules. There's going to be times when there is no pullbacks and you just simply miss the move. There's times when you can expect breakaway gaps and expect when price isn't going to move into a discount or premium. And that has to do with a layer of different things in unique situations. It's not always if price does X, you do Y. Every day, price provides you unique conditions. There's certain patterns that repeat over and over again, phenomena that repeat over and over again, but every day is unique in it of itself. So you have to understand that. Looks like we're rejecting you off the new week opening gap. And this is not part of my rule set to enter off of an old new week opening gap when we displace this heavily lower. Even if we do, that's fine. That's not part of my rules. So I think I talked about this last Friday. It was inside of the Telegram group, where if you see very heavy displacements like this, and you don't want to chase price, zoom out to your 5-minute and your 15-minute time frame, and that will provide you a little bit more clarity, particularly the 15-minute. You can see here we got 8 minutes, so I'm not saying this is going to form yet, but there is a fair value gap that could potentially form in here. And to me, that's a higher probability, okay? And we're just continuously displacing lower. So there's nothing in here, at least for me particularly. And if you feel some type of emotion about this, then to me it just means you're not seasoned enough. You're going to miss moves, quote unquote, over and over again. It means nothing. It's only what you make of it. Probably why most of you are probably, if you are upset you're missing this, probably because you're on some type of prop firm challenge. It's cool to see volatility since we've been, stuck in such range-bound conditions, but there's just nothing as far as entries. I'm gonna grab something to eat here real quick, so I'm gonna mute my mic. All right, I'm back. Khalif, if you go to my Twitter, it's the Telegram's pinned to my page. I believe your name is Dylan. No, I don't believe we're gonna take out buy side. We've displaced way too heavily today. A range, most days are capped at a certain amount of points, meaning that it can only move a certain amount. And to me, we've already displaced very, very heavily in here. I mean, 38 points, but the conditions that we've been in, that's a lot. In terms of like just how much in terms of like candles we moved in volume, it's a lot. To move all the way back up here in the buy side, it's not probable. The fact that you're looking at higher time frame context, we're moving through BISIs, we're moving through bullish PD arrays. If you're reading order flow and you're trying to gain an understanding as to far as what price is doing, what side is it respecting? Is it respecting bearish PD raises or is it respecting bullish PD raise? Which one is it not? Well, we're not respecting bullish PD raise on higher time frames by any means. We're slicing right through them. And when you move through 3 PD raise, so if you're looking at an intended direction, it moves through 3 of them, then that means it's invalidated. So to me, we've moved through multiple bullish PD raise. So to me, my bullish bias or narrative that I was looking at this morning is no longer valid. So now I have to change gears and I have to unmarry that and I have to switch and look at the other perspective. So you have to do that in real time and identify what your next levels are. So for me, sell side would be here at 41.32, and we would start looking at, okay, what would set us up to get into there? And I just don't see anything right now. If you're looking at a 1 minute time frame, yes, there's a SIBI in here, but we've moved into such a deep discount. And what I mean by that is look at our previous dealing range. This dealing range low to high here, we're inside of a very, very deep discount. I do not want to be selling inside of a deep discount. I need price to return into some type of short-term premium on lower time frames in order for me to like shorts. Otherwise, I sit still and I do nothing. Could this work out? Could we short off of this and price digs into the sell side? Sure, but it's not part of my rules. It may work out this time, you may get lucky, or you get your ass handed to you and you take the loss that you already knew you weren't supposed to take. So you're going to learn through pain or you're going to learn through other people's experiences. Trust me, I've learned through an immense amount of pain and torture, and you don't want to go through it. It's not fun. It's not needed. You're in this industry, success is not guaranteed, and you have to understand that these losses and these lessons, you're going to continuously keep going around the mountain over and over and over and over again until you stop doing it. There's going to be certain times and unique situations that something like this plays out, but it's not part of my rule set, so I can't do that. It's unnecessary for me to take that loss when I've taken losses like this. In this exact condition, I've taken losses like this, so I would rather just prefer to sit out of it. It's not something I feel eager to jump into. It's perfectly okay not to take a trade. Okay. Look how heavily we've displaced. We've had no short-term retracements. We have had no run on short-term buy side on lower time frames. To me, it's just I have to wait. You can see here, yeah, we're displacing lower, but I feel no type of emotion towards that because there's been plenty of times where I've done this and then I got stopped out. So, to each his own. It's the way you want to trade, but personally, this is the way I look at the market and the way I trade. I'm going to extend out this 30-minute BISI, the old one, probably even the 1 hour if you look at it. I would look at it as if we retrace back up into that region, it would be used as resistance or something to support if there's confluences in that region for us to potentially set up a short. But looking at price, I don't see anything worthy, personally. When you move this much, it's really not a good sign. Yeah, I mean, even entering, like, I'm just looking at this just for hindsight purposes, but um, my stop loss would I'd go there, 5.7 points. I mean, again, I've learned my lesson too many times to want to do this. So um, you have to keep in mind that if even it doesn't matter, but we're on Tuesday, you can capture a setup that's more high probability, that has more confluences in your favor, that could make up for something that you potentially quote unquote missed. Um, these concepts repeat every single day, every single week. I'm never fearful. I never have emotions that I have to do something. Um, it's the reason why we got into this is I want things to be as low stress as possible. I'm not a gambler. It's a business. Dollar is still not wanting to get into sync, which doesn't surprise me at all with the way it's been acting recently. I'm surprised that it didn't. We haven't seen any bullish movement out of dollar with how much we've been seeing lower prices in ES. So 4132 is tagged. So what do we do next? Well, we have to look at what other arrays can we use as a draw on liquidity. Well, as far as like a higher time frame perspective, I see the 1 hour BISI in here that we could draw into. And this one here as well. And I was even just looking at ICT's tweets and stuff. It doesn't look like he sees anything either. Looks like he went short, if I'm not mistaken, earlier, but you'll see that as well with him. Like, we're all very unique individuals, and we all see the market in our own way, and we all take advice or at least, um, tips from certain people, and we blend it to make our own. So even though, don't let me or him sway you in some type of way. If you resonate with the way I trade, or you resonate with the way he trades, then that's perfectly okay. But if you saw something in here that that you took and I didn't take, um, don't let me deter you away from that or make you feel like you did something wrong. But if I was looking at it from my point of view and the way I personally trade, there's nothing in here that was noteworthy for me to take. It's just simply me reading price and watching it go to certain draws on liquidity. And I don't think anybody could have suspected this. Like, in hindsight, everything's easy, but there's nobody out there that would have been able to tell you, yeah, we're going to move this much today, we're going to move to here. Nobody could have told you that. That's literally impossible. Looking at the 4 hour time frame, we have that BISI in here, so see if we want to fill that in. Look at the daily time frame again. We're moving into that for value gap. That doesn't mean that we're looking for longs. It's just a simply draw on liquidity. So if you're going short, let's say we hypothetically were short, we would peel off a partial in here. And that's the way I use price. So even though we're not bullish, I'm looking for price to draw into that. And we do have this bullish order block in here. But the fact that we've been displacing so heavily lower, I don't see us being bullish anymore. Even a higher time frame, I think we may be changing, which agrees with seasonal tendency. So I'm not surprised. It's May 2nd, so moving into summer months. It's a good sign, though. I'm happy that we're moving a lot. Could set up a lot of things. Do be aware that when you have large movements, large range days will create small range days. So this week's very unique. if I had to be honest, I probably won't take a trade for the rest of the week. I mean, maybe FOMC tomorrow after the first 30 minutes, because sometimes it's really, really clean PA, surprisingly. But per ICT's rules, we should be done after today with NFP alone in and of itself. But we have FOMC stacked on top of it as well. There's so many things being thrown at you, and you have to be aware of this. If you ask yourself, why didn't my model work, or why am I not seeing this? Like, look at the things surrounding it. There's so many things that are stacked against us right now, which means to be patient, be still, calm. Dollar index is dropping lower. Look at the chat. Yeah, April's PA was absolutely crazy. It was probably in the last 5 years the worst price I've ever seen. It wasn't anything like super out of the ordinary, but we were just kept inside of this really, really tight range for so long, and we don't have a clear narrative or direction on a daily time frame. It's really, really problematic. It's the reason why I was pretty quiet on social media, because there's just nothing to note. Like, if you see people talking a lot and posting a lot, doing all these things during a time that's like that, they're probably doing it for some other reason. Emma, hi. I'll read over it. Yeah, you're probably gonna not like my answer, but that's simply experience. You'll learn through your own ways that when you miss your own entry, how to re-enter into the market at a level that you like. It's simply experience the time on the charts. If I missed something today, like if there was something up here that presented itself, aka I was looking at this is something that I wanted to go short on, but it just never dug up into that. Let's say price dug up into that and I missed it. Then I simply have to wait to see if there's something else that would, so if there's another fair value gap and price dug up in there, and then I could re-enter it. And it has to be at a logical level. You're going to see through time that you're not chasing price if you're working within certain contexts and you know where price should draw to. ICT says this all the time because a lot of people look at what he's doing. They're like, oh, you're chasing price. It's like, not necessarily if you know where price is going to and you know the exact level and you're positioning yourself correctly. Again, it's going to be through time and experience you'll learn. So hindsight, we could have shorted there, guys. We could have all been up in profit. I feel no type of way towards that. It's not part of your rules, or at least my rules. So looking at the time and how much we've moved, we got about 20 minutes till my 10 o'clock hour. It's usually when I hang things up. It's usually when I'm about done here. We've moved a ton today. So if you see any type of retracements, suspect that price could just stay range bound. I would suspect that probably from here going into the lunch hour, they could create some type of consolidation, and then PM session could set something up. But it's one of those to me where I was looking at it through a retail lens, and we are all retail, don't get me mistaken, but I'm just saying the way trend lines and stuff like that. To me, a lot of people would be just chasing this, and they're seeing lower prices, and they're continuously trying to keep selling. So they may throw in a short-term retracement and then just hold it. And then there's going to be orders stuck in between that on lower time frames. And you just have to wait until it takes one of those sides and reverses. So I'm going to go through the time frames again, and I'm probably going to end the live stream, to be honest. There's just nothing in here, guys. And I suspected it. It's typical of the day before FOMC. Typically, it's not this much movement. Typically, it's actually consolidation in very tight ranges. But since we did have the news event driver, which I believe was jolts, and typically that's volatile news event driver. So I'm not surprised by this. I am surprised that we did not see higher prices, which is perfectly okay. You're gonna get the ICT talks about this, and I don't want to go too much on a tangent, but the whole thing with being right and being wrong, it's not important, because you can be wrong but yet still be profitable. You can be right and still take a loss. So that's not important to me. As long as you're able to identify in real time when you should be switching gears, when you should be unmarrying a bias, why that is. So we talked about how price was going through multiple bullish PD arrays. It was not respecting them. There's nothing on the left side of the curve. When we were up here, there's nothing in here. I talked about how there was nothing in there that would support price to potentially go higher. Remember how I looked at the 4-hour, we dug into the 1-hour, there's nothing inside of this area. So it kind of was tipping its hand to me that we might see lower prices today. And we just kept slicing through bullish PD arrays. So it was showing no willingness to go higher. There was nothing that presented itself on lower time frames for us to go long. There's nothing in here for us to go short. So it's just simply a no trade day. And to me, it's a win. I love these type of days because I don't spend a whole bunch of mental capital. And that's why I'm probably going to log off here, because my old self would be sitting in here spending so much time looking at these charts. I'd be sitting here for the next 4 hours. It's like, what the hell are you doing? You have a life to live. It's going to repeat tomorrow. It's going to repeat the next day. It's going to repeat next week, next month, next year. So just go out, do something with your life. I'm going to go to the gym. I'm going to do something productive with my day. And I'll come back to the charts at a later point and see what price did. As far as tomorrow, I will live stream in the afternoon. I will live stream the FOMC event. We will look at how price reacts 30 minutes after FOMC. You typically let the first 30 minutes play out, and then we'll see if anything presents itself. But as far as today, good study. Put it away in your journals. Record how you felt. If you did feel type of emotions, it's not a negative thing. It just may be meaning that you're not as experienced. You're not as seasoned. You may be looking at me, and I'm not saying this, but I'm very calm. It's because I've been seasoned. I've been weathered. I've done this for many, many years now, to the point where it doesn't mean anything to me. I'm very emotionless to all this. It's just simply candlesticks on a screen. Okay, so that's going to be it for today. I appreciate all you guys tuning in. Please make sure to subscribe, like, share it. Give my Twitter a follow. My Telegram is pinned to the top of my Twitter page as well. So without further ado, good luck and good trading, everybody. Be safe.